Well, worries that China's stock market could crater if its biggest property developer, Evergrande, collapsed have been slightly eased today. Evergrande has said it's in serious trouble, but its shares were down 10% on the opening of the Hong Kong share market today. Business editor Ross Greenwood is with us now. Ross, has the fear factor been turned down a notch, do you think?
Perhaps turned down a notch, Ash, but only a notch. The reason is because this company has got some $400 billion worth of debt. It's China's largest property developer. It has been the mainstay for many Chinese people to actually try and get their foot onto the property rung. And of course, many of them will lose significant amounts of money if this company goes broke. The share price is basically fallen 10% on the opening today after a statement from the company. It has been suspended from trading for about the last 2.5 weeks. And so this was really one of the critical points for this business. Now, since then, the share price has actually moved around just a little bit. And you can see here now, down around 7.5%. 22 Hong Kong cents, $2.73. I can even give you a small update on that one even now, $2.67. So it's down around 9.5% as we get aware right now. But there was a statement from the company, and this is the key here, because they had been trying to sell off their property services business for around $5 billion. Because there's a series of payments that are due. So this statement says that there has been no material progress on the sale of assets of the group. Effectively, what they're saying here is the deal to sell off that property services business has not worked. So there's no $5 billion coming, which could have been used to make these payments to other creditors that were due. It also said, in view of the difficulties, challenges and uncertainties, the group will be able to meet its financial obligations under the relevant financing documents. In other words, it's raising doubts here as to its solvency and its ability to survive. But the view is broadly that the Chinese government will really prop up this business, will not allow it to go broke, mainly because of really the discord it would create in the Chinese community, because so many people are really beholden to their wealth with this particular business.
Yeah, it sounds like that's going to be the likely outcome. We'll all be watching really closely though. Ross Greenwood, appreciate your analysis. Thank you.
No problems.